Alright, so today I'm going to take you guys through the trade, my biggest trade yet, my best trading day yet. I copy traded on 5 of my funded accounts, but the total profit came out to be around 18K. So I'm going to just walk you guys through the trade that I took, or the trades that I took. So the first trade was a loss. I recorded the second one, so that's what I'm going to go over after I just do this quickly recap. So the first trade was a loss. I did not record that one. And then the second trade was the win. It was a 115R, and it played out beautifully. So I just wanted to show this. Also keep in mind, I'll show you right now, because I forgot to add this, or to draw this out in the recording, but I had it in mind. So we have this high right here, previous day's high. You can see that ES failed to take out previous day's high, but NQ took out previous day's high. So that was the SMT that I was looking at. That's why I was looking for expansion lower. So now we can get into the video. So let me switch the OBS thing over. Alright, there we go. And I gotta... Why is it like that? Alright, whatever. That'll have to do. For some reason, I have to like shrink it. Can I just make it stretched? Yeah, that's fine. I'll just make it stretched. Boom. That kind of looks weird. Oh my god, bro. Alright, that's fine. Alright, so now we have the live recording. Let me see if I can put it in like 2x or something. Playback speed double. Alright, there we go. So here we are. We have the I recorded the second trade that I took, the 115R. I didn't record my entry, but it's like very, very close to my entry, like 2 minutes after my entry. So on the left side chart we have, or they're both micro NASDAQ charts, but on the left side is the 1 minute, the right side is a 15-second. You know what, let me hopefully you guys can see well. I can't see what I look like right now, so if it's cooked, then it's cooked, but it should be fine. So on the left side we have the NASDAQ 1 minute chart, on the right side we have the 15-second chart, and so we have this up close candle. Okay, let me start from the beginning. Let me build the narrative for you guys. So market opens, we rally higher, take out previous day's high, we drop, we have a shift in structure, so that's where I took my initial short that got stopped out. And then we rally up, take out buy side one more time, and then we displace lower, create this fair value gap. We come up, hit it, and then we respect it, drop lower, creating a bearish order block, which is this up close candle right here. So that's your bearish order block, right? Draw that out in time. You can see these candles are respecting this bearish order block, and then this last up close candle rallies higher, takes out these highs, and then the next candle displaces lower, makes a new low. And so I use this candle as my order block entry / propulsion block, which is it's basically another order block that dug into the initial order block, and the propulsion block should be the price point that will send price, that will propel price, or like cause expansion in price. So propulsion blocks are very, very powerful if you are on sides and you know the narrative and you know how to pick a propulsion block. So that's pretty much the most of the narrative. On the right side you can see this 15-second chart. We have an inversion fair value gap after hitting the 1 minute propulsion block, so that's why I highlighted it, because it was after we hit the 1 minute propulsion block. And then so yeah, let's play this out. I put it in 2x speed, so shouldn't be that long. So you can see We're respecting the 15-second inversion fair value gap, and we hit the 1 minute propulsion block or order block very nicely. Bodies respected it, and now we should start expanding lower, which is what we get right here. Me just marking out the initial sell side, and we keep expanding lower very nicely. And I move the time indicators to indicate the 10:50 to 11:10 macro, which is when we should see a run on liquidity. So we start to zoom out. You can see my long-term target. So that's the minor sell side liquidity, and then down here is the main sell side liquidity that I was looking to target. And here you can see, I'll pause it real quick. So here you can see my my entry was, again, like I said, the up close candle's opening price, and then my stop loss was above that candle's high. So that's why I was able to get such a big return, because I had a very tight stop loss and a very wide target. And as you can see, I took a loss prior to this trade. So again, I was already in drawdown, and yeah, one losing trade doesn't, as long as you can stay focused and you know, remain calm and be able to read price efficiently even after taking a loss, you'll be fine. So this is me just setting my TPs, and let's just watch this play out. Yeah, I didn't risk as much on this trade because the first trade was a loss, so I did decrease my risk. So I could have made more if I didn't take that first loss, but doesn't matter. I'm fine with what I made today. So so there we take out minor sell side, and then we get really close to that this inefficiency, the blue inefficiency, which is a buy side imbalance, sell side inefficiency, so a bullish fair value gap basically. And here I'm typing out, I'm not taking partials because I think it's very likely to run lower, but excuse me, I do say that this is a good area to take partials. This would be a good point to take partials, especially if you're not comfortable holding your trades for your final target. But me, I have the experience to hold my trades until my final target. So yeah, well, price does play around here a little bit. This is what you would call a speed bump in price delivery. So instead of like having like a smooth sail down, we stop at a reasonable price, and then we play around for a little bit. You know, it holds price instead of just delivering all the way. It's a speed bump, so it'll make price go slower, slow it down, and then after it gets over that speed bump, it'll start to speed up again. So I type out, what did I say? Need to see price run through this BISI that we are in right now, as well as get through the September 3rd new day opening gap if we want to run sell side. So basically what I'm saying is, if we want to run down the sell side, I'm going to need to see price run through this bullish fair value gap, as well as September 3rd's new day opening gap. Because if we start respecting that and start reversing higher, that's not what I want to see. So I type out macro is beginning now, should begin to see some good movement. I do not like how the bodies are currently respecting the BISI. So right here you can see the previous two candles. You see how we wicked down, came up, closed up here. This one wicked down, came up, closed up here. So that's what I mean. And then I said I need to see a big bearish signature soon, like that. So a bearish signature meaning something that's indicating bearish or sell side price delivery, meaning price is going to go lower, or it's delivering sell side. So that was a nice move. We came down, hit the September 3rd new day opening gap, but as you can see, the bodies are still respecting that BISI. So I want to see it close below that BISI, and I say in the next two candles, or I'll take some off, because if we respect it like this after hitting the new day opening gap and we start pushing higher, that's not a bearish signature that I want to see. So I would take some of my position off just to make me feel more comfortable in holding this trade. So that's why I typed it out. So we'll see what happens in the next two candles. I marked this out as immediate rebalance because I thought it would just run lower, but instead it started to push up just a little bit. So again, I'm not feeling anything right now. I'm just watching price, seeing what it wants to do. I already know what I'm looking for. If it shows me what I'm looking for, then I'll keep participating, but if it starts going against what I want to see, then like I said, I'll take some off. But as you can see, within 2 candles we start to drop lower, and then we get that close below the BISI like I wanted to see. This is the first fair value gap after the market open, which is what I was targeting. So as you can see, we do get that close below the BISI, which is what I wanted to see. That's just me highlighting it right there. And then now I draw out this order block, which should have been respected pretty nicely, but played around for a little bit. Well, it got respected at first, came down, hit the new day opening gap again, and then we rejected for a little bit more. But this is I wanted to see this act, or the old BISI act as an inversion fair value gap now, so meaning that the bodies should respect that inversion fair value gap, and they shouldn't close back above that orange shaded area. These two bearish PD arrays, which is the inversion fair value gap, the orange area, as well as the bearish order block. So again, we're watching to see where the bodies close. And as you can see, the body respects the inversion fair value gap. And if I go to the 5-minute, you can see that we have a 5-minute 2022 model playing out. So we just tapped into the 5-minute fair value gap, which is what that push higher was for. So we should start dropping again. So this is why it's very important not to be tunnel visioned on one time frame, because if you were just on the 1 minute, you would have seen this run up. You probably would have got scared out of your trade, or you would have not been in the trade and thought we were going to reverse higher here. But if you go to the higher time frames and the other time frames, you'll see that we have a very, very clear bearish signature on the 5-minute. So that's why it's very important not to get tunnel visioned on a single time frame. Okay, yeah, my computer shut off there. But yeah, we have this 5-minute 2022 model playing out, and the bodies are still respecting that inversion fair value gap. We do close outside of it, but the next body opens inside of it. So that's what you would call a mohawk, meaning a small, coloring outside the lines. When you're painting in a picture or you're coloring in a picture, you're gonna have little lines that color out. You're gonna have lines that you color outside of sometimes, and that's what you see in price. So now we just wait, let this play out. I wonder if I could speed it up a little bit more. Oh, too much. So yeah, as you can see, price came down, hit the new day opening gap, and then it started playing around for a little bit. So like I said, this was a speed bump, but if we just move a little bit more, there we go, we start to get some displacement right around the 11 o'clock hour. So we displace lower, make a new low, and then what I'm watching right now, okay, why did the time go back to playback speed double? It says double, but it's pretty normal to me. So here's my my trade, as you can see, playing out, and then we close below the new day opening gap. So then I type out new day opening gap should send price lower. So watch very carefully what happens here. So we come up, hit the low of the new day opening gap, and watch what this candle does. I'll let this play out real time. Actually, no, it's gonna be too slow, but just watch. Move my stop to the breakaway gaps, and then look what price does. Okay, can I show the chart, please? Oh, this is where I try to take a partial and I accidentally add more to my position. Yeah, that was not the smart. That was not the smartest move. I thought I was taking partials, but I actually added more, and then I realized, I think, oh, I should just close the position. But then I just let it run to my my TP. It's like, oh, it might just run down there anyways. But can I show the chart again, please? I'll let you guys watch my TP get hit. So, boom, TP gets hit, both accounts, and then okay, I'm gonna pause it here so you guys can really look at what price did. So we come down, close below the new day opening gap, open up, push higher into where the low of the new day opening gap, hit it to the tick, and like this right here should be enough proof that the markets are not random. So I leave type it out before it happens, hits it, and then sends price lower, and then hits my TP. So yeah, we already went over that. Very solid trade. As you can see, I was enjoying opportunities. Jay got caught in this beautiful trade. Lost for white out. Don't get caught after 1 or 2 losses. All it takes is 1 or 2 losses. Yeah. Then I just logged myself out of my accounts. I already explained the propulsion block, but you guys can see what I typed out. Okay, that is not your prepared propulsion block. Yep, we already went over that, David, so you don't have to go over it again. Oh yeah, I didn't go over the mean threshold though. So you see how the mean threshold was never hit? That could be your stop loss. Has to be above the mean threshold, but that's what allows you to have such tight stop loss. See, I could have had my stop loss lower, but I feel comfortable placing it up here, so that's where I put it at. So I was just marking out the mean threshold. Has to be above the mean, but I might safe place above the candle. Yep. Okay, we already saw the trade, and that's it. All right, so that's it for the trade recap. I guess I can show you guys the. Well, you already saw them, but yeah, that's pretty much it for this video. If you liked the video, leave a like. If you're new, subscribe. If you're not in my Discord yet, join my Discord tomorrow, Friday, September 6th. I am doing a free live trading with the whole Discord, so make sure you join that before the day is over. And yeah, that's it for this video. So I'll see you guys in the Discord tomorrow, and on YouTube I'll see you guys probably later if I post another video, or I'll see you guys tomorrow when I post another video. So until then, be safe.